Hey, what's up everybody? Zach is back with another episode of Journey to $1,000,000. What to watch for this upcoming week. So the blog is posted on prostockadvice.com/blog, link in the description. So let's go ahead and pull that up on your screens, everybody, and let's go ahead and start going over all this good stuff. Alrighty. So, last week we did have a small dip, and we all kind of expected that to happen, but we had a decent bounce back on Friday, even though tech was still a little bit down. So some people say that there is money moving out of tech and into more traditional stock, but I think that this week we will see a nice swing with tech. So I personally feel like this is probably the middle to late stage of a bull cycle. I think we still have at least a year. I mean, everything is on the up and up from the corona. Things are opening more up, more travel, vaccines. And I mean, overall, there's still a lot of money, a lot of retail money going into the stock market right now. So I think, not to mention the stimulus that's supposed to be coming up in March. And the Biden administration has said that they will not increase interest rates until at least 2022. So I think that there could, personally, I estimate it would be at least until 22 or 2023 until we see some sort of major pullback or correction in the stock market. But nevertheless, I want to go ahead and go over some really cheap hedge or insurance policy that we can take a look at doing. And if you were on my live stream on last Friday at opening bell, which we do, we try to do almost every day the market is open at opening bell. We do a live stream, live trading. So go ahead and follow and turn on the notifications for YouTube or even Twitter, and then you can see exactly when we're going to be doing that. But anyways, we did talk about that, so I would like to cover that a little bit in today's write-up. But first, let's go ahead and see what we will add to the watch list. The first one I would like to add is going to be NIO. Now, unless you've been living under a rock, you know exactly what NIO is. NIO is a Chinese electric car company, and it has experienced massive growth. I remember when it was just $4, and now it's trading for 55-ish. But I would now that it's pulled back, it's trading on my support right now. It's in a nice parallel channel, as you can see. And this is a buy, even though I really think you're getting a better bang for your buck in Li or XPEV or Xiaopeng, because Xiaopeng has the autonomous tech. But I still do think that those are probably a little bit better to be in, especially Xiaopeng right now. But NIO is on the support, and they are the most popular luxury Chinese electric vehicle in China. And take it from me, I see them everywhere here. But I could be interested in getting in around right now and maybe cost averaging into some leaps, maybe deep in the money leaps, try to get a 70 delta, 85 delta, something like that. But it could be really interesting to do, and just wait around for the next EV push. Once the next EV push happens, I mean, all of them are going to go up, including Solo, Tesla, Xiaopeng, Li, all of those good ones. But anyways, I think this is a good chance to be in it, and technically it's a little bit under my support right now. So, let me know what you think about that one. And then the next one is going to be OZON. OZON.ru is an e-commerce giant of Russia, which is pretty much, this is the Amazon of Russia. Now, you've probably all heard those stories. Well, if I just bought Amazon, you know, when it was trading for this and this price, then I would be a billionaire right now, for sure. So don't miss your chance on this one. And also, I had been watching Jumia for some time now, and it has gone up a lot as well. Jumia is basically the Amazon of Africa. But anyways, the Amazon or Alibaba or whatever you think about it as. But anyways, OZON is of Russia, and it recently IPO'd, and it was a really big IPO actually. It's currently around a little more than $66. But I do see this nice parallel channel. So if it can keep that, and if it pulls back to and fills this gap, which was around $57, I checked, I would definitely be a buyer. This one I would probably go in for some long-term options, or possibly just even buying shares of this one. Maybe we could sell some puts, try to get a couple hundred shares, something like this. But long term, this is going to pay us, in my opinion. So target price, I put around $75. I think it should blow through that in just a couple of months, but we will see. Risk is a 4. I don't think it's all that risky. This one has a lot of upside potential. All right, and then let's move on to the notable mentions. Palantir is going to make this list again for myself. On last week, I had dollar cost averaged in my buy zone into a couple of Palantir option contracts, specifically the August 21st at a $30 strike. So while it's still down, even though it is a little bit above, I'm still going to be watching this one very closely and trying to dollar cost average into even more positions as well. So there is that, but everybody is talking about Palantir right now. It's making its rounds. ARK is buying it up. Overall, this is a long-term play, and I think it could pay pretty nicely. But I'm going to keep all the targets and the entries in the time frame the same for Palantir. So go ahead and check prostockadvice.com/watchlist, and you can see the official watch list and all my targets and entries and time frames and whatnot. All right, and then the next one is Workhorse. This one has already been on my watch list, but it has pulled back, and it is actually approaching my buy zone. Well, it was approaching my buy zone last week, but it bounced up a little bit. So I think with the Biden administration and they want to electrify all the federal vehicles, and there is some serious talk right now that Workhorse could be getting the USPS contract for that. And once that's confirmed, this could there would just be a feeding frenzy on Workhorse stocks. So I think we start getting into some positions right now. I'm not going to go too big on this because as far as I understand, this is still in the rumor stage about this USPS contract. But if you guys want to double check that for me, and also keep paying attention to this one this week, I think it could be a very interesting play. But if it did fall down a little bit more, which I don't know if it's going to, so we could dollar cost average now, or we could just take a chance and wait for it to fall down. But both would be very acceptable in my opinion. I usually don't like to force trades, but with this rumor could be coming up here soon, I think it could take off. So it's just really going to be depending on how you think about it. But there is that. All right, and then lastly, I would like to go ahead and talk about the hedge that I'm thinking about and that I did go over on my live stream. But I'm really thinking if the market does crash, we could buy these really cheap insurance policies. And basically what it is you go to the Dow Jones, the DIA is the cheapest ones that I could find. And this is just a generalized, just an entire market hedge. And it specifically is Dow Jones. But if the markets crash, then it doesn't matter if Dow is going to crash, NASDAQ is going to crash, or S&P is going to crash, or the tech sector ETFs. You can do this on any single one that you want. If you're heavy in semiconductors, you could do this hedge on a SMH or something like that, shaking my head. But anyways, this is what I'm thinking, so hear me out here. I'm thinking about go in the far out of the money, almost as far as we can go, maybe a year plus, maybe get some leaps and buy these puts. Currently, these puts are, the 95 strike is what I'm looking at. I'm doing this case study on, but it's about $30 right now. So for $30, we could buy this cheap insurance policy. And if the market did crash, these are going to go to the absolute moon. I'm estimating with an increase in IV, and if the market crashes, it would be closer to the at the money for our 95 strike than it is when we bought it. So with those two things, I think this could conservatively hit 20x, possibly even 50x. Now, if you look at it, we could spend a couple $100s, couple $1,000. And in the event, it doesn't really matter what our portfolio is so much because we're just going to make so much money. These are just going to skyrocket if the market does crash. In 2008, the Dow lost half of its value. It was a pretty significant crash. And there's a lot of chatter online and on CNBC, whatever news, that the market's about to crash. And a lot of famous people are talking about this. So if you're a little bit nervous, these are very, very, very cheap, quote-unquote insurance policies that we can take out right now. So I'm thinking for $30, $300, $3,000, get 100, get 10 of these policies, 10 of these puts. But, I think these are going to absolutely skyrocket. Now, if we look at it, so if it does, let's just assume it does lose half of its value. So it goes from about a $300 right now if it crashes to $150. So let's say our 95 or 100 strike, that's going to put us at about If it crashes to $150 per share, then that would put us about $50 out of the money still. So let's just take a look. And then, so what I did is pretty much, this is just a very, very, very fast estimation. But I just looked at $50 out of the money right now. It's selling for about, and that's at $260. And that's selling for about $1,000. So if we can buy these, we would just do a market order right now for $30, $31. And then if it crash lost half of its value only, we'd only be $50 out of the money at that point after the crash. And it would be worth $1,000. So that's already, I did the math, is 33x. But that's considering the IV on this is only 25%. And I'm going to go ahead and assume that the IV is not going to be 25% if the market crashes to, the Dow loses half of its value in only a couple of weeks or a month or so. I assume the IV is going to be a lot higher. Plus the demand of these puts would also cause the price to squeeze up. So with all of that said, I think these are really, really cheap insurance policies. So if you're a little bit worried, why not? Just go ahead and take them out. Why not just buy a couple? It's so cheap. It's $30. If you're investing in the stock market, you probably have an extra $30. And of course, the sizing, depending on how much in your portfolio. But I mean, if you put just a very, very, very rough estimation, if you put $1,000 into this, and at 33x, so it'd be 33,000. So I mean, you could figure out like how much you would need to buy in order to make how much if you think it was going to crash by 50%, if a big one. But anyways, this is just a very, very, very rough estimation without going into too much of the delta and then the size, the right sizing for this hedge. This is just very quick. I mean, this all it is buying puts and saying we think there's going to be a crash before January 2022. Now, if it hits January 2022, we're going to lose our money. I mean, we could always sell before, but it's obviously going to be, if there's not a crash, obviously we're going to lose some money. But that's pretty much what insurance is. If you have car insurance and you don't get in a car crash, you're kind of just, in a sense, throwing this money away. You're losing this money every month for your car insurance. But anyways, that's pretty much what insurance is. So I think this is not necessarily a bad idea. It could be interesting. I mean, even if there is some dip of like 5-10% in a couple of weeks, I mean, these still are going to go up a lot. Even on the live stream, we saw these go up like 40%, just in the span of like 15 minutes because they're so cheap. But nevertheless, I think you guys can take a look at it. Let me know what you think about that, if it's a good idea, if it's a bad idea, if you think the market's going to crash, if you think it's not going to crash. But if it doesn't crash by January 2022, you can always just buy insurance again. I mean, it's pretty much like a year policy. But anyway, that's what I think, and I think it's interesting. I'm going to go ahead and put some limit orders in for maybe 15 cents, 10, 15, 20 cents, just because I'm not in any rush to get those. Anyways, guys, thanks for tuning in. Keep in mind the risk is on a scale of 1 to 5. And I really appreciate it. Follow me on social media. Follow me on Twitter. Links are all in the description. We have a Discord with the VIP section, which I prioritize answering all the questions for. So anyways, guys, I appreciate you, and go check us out. See you guys on the other side. Peace.